Today is Monday, August the 14th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the grain markets this morning, Mark, with last Friday's USDA reports generally in line with expectations, what will drive price action this week?
I think price action will largely be driven by market's expectations on whether Friday's production estimates will get larger or smaller. We do have some high-profile crop tours going on this week, which should help shed some light on what we actually have out there. We also have updated crop conditions this afternoon, where I look for a 1% to 2% improvement following some pretty widespread rains here in the last 7 days. Historically, oddly enough, when USDA lowers both production and yield in the August report, historically, the probabilities lean towards higher production moving forward. Since 1990 in corn, USDA has lowered their production and yield estimates in August 15 times. In 9 of those years, so 66% of the time, the final production number was actually above the August estimate. And in soybeans, the probabilities for increased production are even higher, with 13 out of the 17 years final production being above the August estimate. But we do have some extreme heat building this week across the nation's midsection by late this week and into next weekend. So how long this high pressure ridge is in place and for how long it prevents any widespread rains from moving across the country's midsection will go a long way in determining crop size, particularly for soybeans.
And Mark, how is demand factoring into price discovery right now?
Well, I think demand or lack thereof is a big reason for the price weakness this morning in the grains, while the soybean complex is starting off on a firmer note this week. U.S. corn prices continue to be undercut by supplies coming out of South America, looking out into at least November. That is keeping U.S. exports well below the historical average. This morning, the December 23 corn has matched the low from last month in July at 481. I hold the 450 to 460 downside objective here by the end of this month. Different story in soybeans, however, with U.S. prices more competitive with South American supplies. We're starting to see a nice surge in demand for U.S. soybeans. This morning, we saw another 15 million bushel sale announced to an unknown buyer. So for now, I think U.S. November soybeans will have some pretty good underlying support in this 1480 to or 1280 to 1290 range. In wheat, prices just continue to be pressured by weak demand, cheap wheat coming out of Russia despite the ongoing war with Ukraine and the collapse of the Black Sea Grain Initiative. So, but I think it's getting pretty risky to be short wheat from these much lower levels. I look for both Chicago and Kansas City to hold above their spring lows.
Mark, what does the fund position look like right now as it applies to the grain markets?
Well, last week, money managers were healthy sellers pretty much across the board in the ag space, selling just over 100,000 contracts. Overall, they continue to hold at just a very modest long position across the board in the soy complex. In Chicago wheat, we've got them short about 65,000 contracts coming into this week. And in corn, money managers last week were pretty good sellers. They continue to flip back and forth between being long and being short. Coming into this week, we have that short position sitting at right about 40,000 contracts.
Alan, let's turn toward the financial markets here. What are the dominant fundamentals affecting financial futures markets currently?
Well, the newest fundamental in recent days is some Fed officials are once again talking about the need for additional rate hikes. Just last week, we had Fed Governor Michelle Bowman saying that she expects additional interest rate increases will likely be needed to get inflation down to the closer to the 2% target. So a more hawkish Fed in recent days is pressuring stock index futures, precious metals, and some of the industrial commodities such as copper.
Alan, speaking of copper being one of the industrial metals you watch, what are the charts saying about the copper market right now?
Well, the charts seem to be rather bearish. In fact, we did have a double top breakout to the upside in late July. That only lasted a few days before pressure developed, and with prices then falling all of August. So I do see the 368.30 low made on June 29th, which is the next support, taken out on the downside. We're not really that far from that level right now. But that low should probably not hold, and I think there may be a little more follow-through weakness with that support most likely being penetrated.
Alan, as it applies to industrial metals, I mean, copper being one of the leaders, do you expect other industrial metals to follow the lead of the copper market? Is copper typically the leader in that?
Yes, it is. Copper is the bellwether metal, the bellwether commodity. So it is often considered to be an indicator of what the global economy is likely to do. And with all this weakness in copper, that would suggest that the global economic outlook may be a bit more clouded, and maybe some pressure developing in the world economy longer term.
And lastly, Alan, what are the most market moving reports that traders will be looking at this week?
Okay, so Tuesday we'll have retail sales guessed at up 0.4%. We'll have the August housing market index at 56. Wednesday, housing starts predicted to be 1.455 million, permits at 1.464 million. And also Wednesday, the FOMC minutes from the July 26th policy meeting, that'll be a 1 o'clock report. And then finally on Thursday, July leading indicators anticipated to be down 0.4%.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.